Hey, what's going on, guys? This is Fire Trader from firetrading.org, and I want to do a video today going over what low float stocks are and how I like to trade them. Low float stocks are pretty common among a lot of people because of the typically low prices and the very fast movement in these stocks. They offer very fast, quick cash if you can be on the right side of things. So that's sort of why I wanted to go over these, because I get a lot of questions about how I trade them, what I like to look for in them. Okay, so first things first, I want to go over what the float is. And the float is the amount of tradable shares that the company provides for people to trade and invest in. When you have a limited supply, when you have a small float, and I consider anything under 10 million to be low float. It could differ from person to person. There's no black and white answer. Maybe under 5 million, somebody thinks is low float. Maybe somebody thinks under 20 million is low float. I think 10 is a good amount. So when you have a limited supply and the demand in that stock increases, we tend to get very fast, rapid upside movements. These are the type of stocks that you guys will see go, parabolic. We'll see them go from $5 to $50 in a day or two, and get crazy sometimes. So I pulled up a good example here of THMO, and this is the type of price action that you'll see with these low float stocks. We get very fast, rapid movements to the upside. Okay, so now that we know what a low float stock is, just to recap, it's a small amount of shares that the company has provided, and when the demand increases, we tend to get very fast, rapid movements to the upside. Now, let's go over how I like to trade them. I try to avoid trading low float stocks the day that they are moving. I like to be in the trade before it even starts hitting people's momentum scanners, or it starts hitting people's scanners. And when people are trading it, when people are buying into it, this is when I like to be getting out of my position. And I'll show you guys here how I like to do it, how I like to find them, what I like to look for. But what I like to look for is accumulation patterns followed by a technical breakout. And this is when I like to enter into the position. I don't mind swinging these. Typically I do, actually. I'll get into them when I see the accumulation pattern forming, when we get a technical breakout, and a lot of times we get a lot of follow through days after that. Okay, so a good free site here to look up these low float stocks is going to be finviz.com. Now, when you get on this site, you guys can go right here to screener, and it's going to pull up a bunch of different things that you guys can look at, a bunch of different trading strategies that you could search for. But if you click all, it'll bring up basically all of them here, all these different criteria. Now, right down here, you can see float. If you go down here to 10 million, under 10 million, select that. Now it's going to pull up all the stocks that have under 10 million float. Sorry about that. Now, what I like to do is I like to select charts because I want to see what the chart's doing. What I like to look for in these stocks are beaten down stocks that have started to find a base. And when I find these stocks that are beaten down and then they start finding this base, I like to look for accumulation patterns down here. So if we just kind of scan through here, ABIO, this is a pretty good example, right? We're pretty beaten down, starting to find a base right here. So let's go and punch this in. Let's take a look. ABIO. Okay, so we started to find a base down here at $4. Okay, so now on this stock right here, we are seeing an accumulation pattern. And if you guys don't know what an accumulation pattern is, it's when we get very large volume spikes on green days. So when you have small movement in the stock, but you have a big volume spike, that's an indication of institutional accumulation. So as you guys can see right here, green candle, limited movement, but we got a large volume spike, right? Limited movement, large volume spike. Limited movement, large volume spike. Limited movement, large volume spike, and so on. We're seeing a lot of accumulation right down here at this $4 level. So that's something to keep on watch. Now at this point, what I'm going to do is I'm going to go and just look at the technical levels here. So as you guys can see, we're trading in this range between about 550 and about 370, right? we're just trading in this range. We're range bound. We're consolidating. We're building a base down here, and institutions are accumulating down here. We can see that. We can see them accumulating with these large volume spikes. Now what I'm going to do is I'm going to set an alert here at 550. When we start breaking this technical level, this is when I will enter my position. And it offers me very good risk to reward ratio, because we know if this thing can start going, this thing's going to get very, very fast, rapid movement. The demand starts to increase. We're going to get that fast, rapid movement to the upside. But I'm going to be in it down here once I hit that alert and I get into it down here at 550. If it breaks back down into this range, I'll get out and wait for that volume and that momentum to start coming into it. As it starts hitting people's momentum scanners, everybody starts seeing it. It's already moving at that point. That's when I'm going to be selling my position. Okay, so that's how I like to trade them. And this could take a couple days. It could take a week. It could take a month. I like to swing these. Like I said, I like to avoid trading them the day of, because it it can be a little bit sporadic sometimes. So I like to be in it, and I like to be selling my position on the days that everybody gets interested in it. Okay, guys, thanks for watching, and have a good one.